So I'm going to show you how to use this asset tracker that I built. So what you're going to do with assets in general is you're going to track them throughout the year. But before you start tracking, you need to make sure you have a good, clean beginning balance. So we're going to go to this tab called 2024 BS, aka balance sheet. And these are going to be your end of year, beginning of 2025 balance sheet totals for each account. So then we have this 2025 starting depreciation amortization schedule. And this is just kind of explaining how things look on your depreciation schedule and how the CIP item also looks on the schedule. And just to kind of give some clarity, when you have assets on this schedule, you're not going to have something that just says production equipment. You're going to have a more specific descriptor. So unit for AC or AC unit, and then a serial number or, something along those lines. You'll have actual specifics on here rather than just grouped items. Okay. So this is here because I want to make sure we're tracking depreciation properly. I want to make sure that the CIP is on there. But if you see CIP, it's not going to have any kind of depreciation or a date in service because it's not placed in service until it's finished, whether it's a project for property, whether it's any kind of building structure or anything that needs continuous work and then it gets placed in service. So it's going to be tracked, but it's just not going to be placed in service and start depreciating just yet. So when we look at this asset summary, this is going to show you the beginning balance of all that, which is the ending balance for 2024. And then we're going to have additions and changes that we pull in. And then we're going to have an ending balance, which is the beginning balance and any additions or changes throughout the year. So we have to make sure at the end of the year that these are the correct balances. But to get to those balances, we need to make sure we're tracking any changes that happen. So for that, we're going to have a list of all of the different account changes throughout the year. So we'll have a list of the bills that happen, any kind of transactions that hit these accounts that need to be recorded as assets or asset changes, improvements, or disposals. So then here we have the account this is related to. I have these header account names just to kind of separate them out by group, but they're also separated out by this specific account. So then we have in column I, we have the amount because we can't track assets without the total amount, the cost. And then we have designation. So the designation is going to be, is it new? Is it an improvement to a currently placed in service asset? Is it a disposal? Is it a brand new asset? And then we have a tracking piece for the associated asset if it is an improvement or disposal. So that number will go there. And that's going to be related to this schedule because there's typically an asset number that goes with it, which makes it easier at the end of the year to identify which asset something is associated with. So then we have any notes that you might need to take on each item. So then down here where it says CIP acquired properties, this is just an example of something that might be in the CIP section. We're going to have all of the different line items where we're going to have different projects. So let's say this one here is a new project, but these other items are additions to current projects. So over here, I have asset number 4, and that on the depreciation tab is number 4 here, which is the CIP acquired property. So that this piece down here is also going to be on this CIP tracker. So this is the detailed section that includes all of that different stuff. And the reason it's separated is because we want to also look at any kind of projects that are happening. Now, if you had 2024 transactions, you want to put them on here as well so that you can actually track each property or project in total. So if we had 2024 start dates for the construction in progress, then we're going to want to make sure we keep those on this tracker. But this is just an example of the tracker to show how you're going to manage this side. And then this CIP property tab is just going to accumulate all of those together based on this related property field. So it doesn't matter if it's a property, if it's a building, if it's a project, that's kind of how you're going to track it. So in general, we have all of the asset changes from the accounting system. We have a CIP by property by project tab. And then we have the CIP tracker, which is going to be everything that's included in these numbers. And then we have, of course, the starting depreciation and the future depreciation or the depreciation estimate for the year, and then so on and so forth. So now we have this summary page. So when we pull in this beginning balance, this is pulling as a sum if formula to the 2024 balance sheet here. And so it's saying if this column matches, if something in that column matches this account, then we're going to pull in this amount. And so that's what that formula is doing. This formula is also doing the same thing, but on a different tab. So it's going to say sum if in this column we find this account, then we're going to pull in this number. And the reason we don't want to just find each specific number, of course, is that we want it to total up all the changes for each account. So if you have different assets in this account, you don't want to separate those out because they're going all into the same account as a lump sum. And so then when you're done with all of these changes at the end of the year, you just want to make sure all of these account balances are the same as what your balance sheet shows. And if they're not, that means something is a little off. Maybe you're missing an asset on this asset changes list. Maybe you're missing a disposal that you didn't realize you missed. So then we have physical assets, aka tangible, and then we have intangible assets. And then down here I just have a little tracking section for the depreciation. So this is just my kind of extra double check on what the depreciation is at the end of the year, what it should be according to the CPAs or the tax preparers. So that's just a little extra tracking, but this is what asset tracker I personally use, and this is the asset tracker that I give to my students so that they can maneuver through big clients or small clients. If you want to use this tracker for smaller clients, it's just good experience. If you have smaller clients and they have maybe just one or two assets or 3, 4, 5, then it's not a big deal to have a giant or to not have a giant reconciliation like this. But as your clients get more and more assets, you do want to be very careful in how you're tracking them. If something's a specific asset, like a brand new asset individually, you want to make sure you're tracking that. You want to make sure you track repairs and maintenance on specific assets that are already placed in service, especially if they're more than some kind of threshold. So some people it's $500, some people it's $2,500. So the larger companies typically do $2,500, and that's to identify any asset that's going to be capitalized. And so that's pretty much where you go with these. And that's how you use the asset tool. So if you want to use this asset tool, if you want to download it, it's in the Bookkeeping Mastery course on bookkeepertesting.com.